24.35 on the downside.
Okay. Mitesh, we'll come back for more in a bit, but we'll see 245 lower on the Nifty, 17,000, 582 is what we have. It's a big one today. We have Prakash Diwan joining in to talk markets, to talk specific stock sectors. Sanjay Dutt of Quantum Securities is also joining us on the program to talk about the sell-off that we have on right now. Gentlemen, great to have both of you here. Sanjay, if I can come to you for a quick word on how you are seeing things and what do you make of the sort of sharp cut that we have on our hands? Would you say this is purely and in a very large way global in nature, or is this a lot to do with the earnings disappointment here as well? What's your sense?
Thank you for having me on the show, Prashant, and your friends there, colleagues there. My sense is that primarily this got to do with the way the yields are panning out. The 10-year in the US is panning out, and obviously that has implications for currency and yields across the world. This is led by that because we had some, bad data in terms of the Fed coming in the US the last few days. And we saw a good sell-off in the US equity markets also yesterday. We've seen the 10-year yield coming back to 3.95. I think that's a cause of worry. And then, of course, what we are seeing specifically today in India is got to do with a combination of that. And added to this, we have settlement pressures, obviously, unwinding wherever the overbought positions are. So combination of these have seen this aggressive, close to 300-point sell-off.
Yeah. By the way, Prashant, I was just looking at our yields while we talk about the US 10-year all the time. Yields here at home also are, you can't ignore them. 7.4% now on the benchmark, and probably explains what's going on, particularly in the rate-sensitive part of the market and even in banks. Sanjay, in fact, let me take that question to you. Now, I don't know, it's been almost 2 months since this year started. Do you still think that this is going to be a passing phase? Or could this be, building up into something a little more significant? In which case, how would you look at financials for at least the coming few months?
I think what we're seeing, Surabhi, right now, I'm glad you raised the point about domestic cost of borrowing and domestic yields, etc. We're already seeing bank fixed deposits rates of even established top PSU names going up, touching close to 8% on various tenures. So, but I sense that most of the negative and most of the impact of the interest rates and inflation and all the data that's coming out of the US as well as coming out here, weakness in some of pockets of earnings that we saw, is more or less being reflected in the price. That's exactly the reason why we're seeing this kind of an environment for the last full month, barring aside, of course, the single corporate and Adani Group issue that we had. So combination of those has more or less adjusted stock prices. And I think there could be better times ahead for domestic equity selectively. I can't probably make a call that you'll get the 1,000-point Nifty up or not, but I think there are select pockets, banks like you asked, some of the PSU banks are pricing in the worst. They could be good time to buy 5% here and there now. But more or less it's pricing in the negatives right now.
All right. Hi, Sanjay. Good afternoon. Sanjay, 1,000-point up, I don't think anyone's thinking about that as of now. They'll be happy with the time-wise correction. But do you think we can see a sharper correction from here? Maybe a 5-10% correction on the Nifty itself?
I don't think so. I think the risk reward for the longs are favorable at this level of 17,500 Nifty. Unless some more data comes up, which kind of compels me to take my calculations sub 17,000. But I think the 17,300, the lows that we saw on the budget day, 17,300, and this 500 odd that we saw today, I said this would be respected. So cutting a long story short, I think risk rewards are favorable to look at some banks, look at some metal stocks, look at some infra players like L&T, etc. We probably would have better time in these select pockets than what we've seen in the last 2-3 months.
Metals, PSU banks, and which is the third area, Sanjay, you said?
A lot of the infra players like Larsen, etc.
Okay.
L&T,
Okay.
The bigger infra players, yeah.
Okay. Got it. Let me get Prakash Diwan into the conversation as well. Prakash, what are you making of things? In your assessment, I mean, are we starting a prolonged risk-off phase, or you think this is just one of those days which will pass, and it's more like we're in a band, and there is perhaps some time correction which is in front of us? Your sense?
Good afternoon, Prashant. Yeah, thanks. No, I kind of concur with Sanjay's view that the market's probably responding to more of global cues and not kind of essentially reacting to anything that's overtly negative, except for some disappointment in earnings for sure. And as I said last time, a couple of times, we've been seeing this is absolutely a complete absence of positive trigger. And so the moment the market gets a sizable negative impulse from the overseas global cues, it tends to kind of give in. And remember, we were in a tighter band. We were in this band between 17,900 and 18,100, and that band there was an expectation that post the budget you would have a breakout on the upside, but you actually had a breakdown. So the same thing would reverse. Markets never oblige with what you seek or what you expect. So it's quite possible the markets could go back towards that 18,000 mark, not exactly there, but towards that. And the reason why, Prashant, we're seeing a little bit of the pressure on the market is this whole China reopening has made FIs continuously take out money from some of the more impactful sectors like banking, IT. And, not that China reopening is so convincing as yet. And that's exactly why you see this waxing and waning in terms of the flows. But that's one of the reasons why all those banks are getting into that oversold territory, because the FIs are exiting. And I don't see any reason why fundamentally you could have to start writing off PSU banks or even some of the private sector banks, which have been doing so well in these situations, to kind of load up. So, it's a good time for long-term investors to buy into value in some of the pockets. But the best strategy is to stick to the large caps, given the fact that any rebound would probably favor that rather than the small caps. And the advanced decline ratio very clearly tells you that. It's not the season for small caps, but stick to the large caps, stick to the heavyweights. And that's where your money probably is going to be made faster.
Sanjay, just want your take on one other aspect. This market anyway was very sluggish, right, from the start of this calendar year, barring one sector, and that's IT. Now, the Nifty IT is still holding a gain of about 6.5%. But if you just see the chart of the last 6 months or a year, it's beginning to trim that gain now. I think today, of course, is a pretty rough day. What's your sense? All the headlines, okay, Wipro is slashing its salaries on offer to the freshers. I mean, I don't know if that's a fresh concern brewing. We know what's happening with the NASDAQ. There's money that's starting to come off US IT. Is this going to be a pillar? What would you do with this part of the market?
Surabhi, this is not really a strength of mine in terms of gauging the technology sector or giving a call. But whatever limited 2 bits I need to add here, my sense going ahead, the IT gains, that the stock price gains would basically be absorbed and consolidated. In the sense, we may go into a sideways kind of a band. Most of the gains we've seen probably in the last few months, and we may not see too much of an upside. But at the same time, I don't see them really falling off and giving up the entire gains that we've had in the last few months, because things are not as bad. In fact, just picking up from what we all were discussing, market never rewards consensus, in the sense each one of us was so bearish on Europe and the Europe winters and the gas prices. And look where the gas prices have come, and look, Europe touching new highs in the equities out there. So, kind of bringing it back to the technology sector, I think most of us had written it off, thinking that, overseas markets are going through a rough patch, means overseas as in business, companies. So therefore, IT spending cutback will happen. On the contrary, that did not happen. And we had reasonably good numbers coming from most of the IT majors. And that's why we've seen a catch-up coming in, because prices got left behind. So consensus trade never proved right when we were looking at November, December last year. But to cut a long story short, I think we'll go into a consolidation phase in the technology stocks.
Okay, all right, Sanjay, final question before we let you go. Briefly mentioned that maybe some of these metal stocks are giving a good entry opportunity, and some of these special situations, well, you've done pretty well in it. I recall JSL, the Jindal Stainless Group, and they're going to merge. You had a positive call out there, and that played out quite well. We have a new steel company that's listed, that's NMDC Steel. The street seems to be building hopes that maybe there's going to be a divestment, maybe there is value in this particular entity. We had the management who spoke to us earlier today. The market capitalization is now around 11,000 crores odd. It's a 3 million ton plant. Have you played this special situation?
Nigel, I haven't really played this, but I wouldn't want to venture here, because again, what you correctly pointed out in your question, that what the government would do, divest, not divest, etc. Because there's no business for government to be in steel, whether it was SAIL or NMDC. So given that uncertainty, if I have to play metal and steel, I wouldn't want to play it through an NMDC. So I really won't. And frankly, I haven't looked at it. So my view is too limited. But broader theme, what I'm pointing out that I wouldn't want to play steel or any of the metals through a PSU. I don't think so. No.
Okay, all right. Sanjay is saying it as it is. Thanks so much for joining in. On NMDC, well, the fear is that, in fact, the plant is not yet operational. It still has a debt of close to around 5,000 crores. So all those who are bullish on it, keep in mind that you have a market capitalization, but you need to add the 5,000 crores to get your enterprise value. And then, you need to take a call post that. NMDC, the iron ore miner, will be buying 10% stake in this entity. So that's another trigger that you should be watching out for. For the time being, we'll slip into a short break. On the other side, we'll be joined by Anshul Sehgal of Kotak PMS. He'll be joining in to give us his view on markets as well as on stock-specific action.